Well, right now, it's an interesting point in this bull market where, on the one hand, you can see some economic data out of the U.S. that might bring a sigh of relief, but then U.S. President Donald Trump talks about tariffs again, and the uncertainty is back in the air. If you're looking for some bellwether investments for your portfolio amidst the angst, let's bring in Will McGough, Director of Investments at Prime Capital, to talk a little bit more about what he is considering these days. Will, it's nice to have you with us. First of all, do you think for people who have been invested in this bull market that despite the uncertainty in the headlines, it is still a bull market as we look forward?
Paul, thanks for having me on. For now, I would definitely say the bull market is on. We typically see corrections either in time or price. And so right now the market's battling over both. The more time that goes on, the more we tread sideways in a volatile range. I think the better we are and the more optimistic I would be about the bull market continuing down the future. But there's a lot of crosswinds right now in the macro landscape and fundamental landscape as well.
You know, we just did a segment with an analyst on technology stocks and the idea that it's worthwhile to pay up for that potential long-term growth in those names. But I would imagine some investors are going to start to feel a little uncertain about tech. You look at a wide range of stocks, and I mentioned that word bellwether. Are there any examples of companies or investments that you would be considering in this market?
So I think investors need to be really prudent about the Mag 7 right now. We've had two really good back-to-back years, a lot of things coming out of Washington, D.C., driving rates and the dollar and tariffs. We just like broadening out exposure. So don't overweight the Mag 7, just be market weight the Mag 7, add bellwethers to the portfolio. So you're looking at the household names that typically hold up well in a volatile market: Procter & Gamble, Walmart, JP Morgan, Visa. You know, these companies are solid and are good to offset Mag 7 overweight exposure with, in my opinion.
Okay, so here's a list of examples for our television audience: P&G, Goldman, JP Morgan, Visa, J&J, etc. So you're still believing that there is some upside for the stock market. It's just that where investors are positioning going forward is the key for you.
Right, and you mentioned it earlier in your first question, it's long-term growth. The long-term growth is still there. We're highly bullish on the U.S. economy, the tech sector specifically, and the AI revolution. We're still going to be a noisy year. So I think just this year, we're looking more cyclically than secular. It's going to be a rocky market. And so you might as well have the safety of the bellwethers included in your portfolio if you've been ignoring them over the last couple of years.
And so do you see like a volatile 2025, but still an up year for the stock market?
Yeah, so underneath the hood, the economy is decently okay. Earnings growth is hitting backwards looking. Guidance has been weak, forward looking. So we're just in this weird period where the whole world is readjusting to Trump's renovation of the U.S. Fiscal house, and that's going to have ramifications, whether it's cap structure in the U.S. versus international. Rates are attractive. So where we've typically said diversification hasn't mattered with Mag 7 concentration, we think this year diversification's the way to be to get the best returns, probably single-digit-ish equity market returns here in the U.S. And if you're looking at rates at 5%, you know, it's a huge trade-off everybody's talking about right now.
Yeah. Well, great analysis. Good to have you with us. Thanks very much for your perspective on a busy morning here. That's Will McGough, Director of Investments at Prime Capital.